if you know what to do, you can save yourself tens of thousands up front when you're buying a home. And then at the same time, lower the interest rate by 2%. A lot of times right now when you're buying a home, you feel under pressure to put a big down payment on that property to have a more affordable mortgage payment. The trick here is, instead of you having to put, let's say, 10% down to have a lower loan amount, what you want to do is you want to use an FHA loan, put 3.5% down. So you're saving a huge amount of cash up front, because 3.5% versus a 10% is a big difference. With that 3.5% down payment, you would usually expect to have a higher mortgage payment, right? Because the loan's bigger. What you want to do is you want to use the system, because an FHA loan allows you to receive a 6% seller credit. And in this market, you can negotiate that with the seller, because over the winter, everything slows down with the housing market, and they're willing to give you that 6% seller credit to get their home sold. So you're going to use that in two ways. The first way is you're going to go ahead and use about 3% of that to cover all your closing costs. So previously, let's say you're buying a $600,000 property. That's $18,000 in closing costs, roughly 3%. That's all covered now. So now you don't have to bring that up front. You save that money. Now for the other half of your seller credit, you're going to use that for what's called a 2-1 buy down to lower the interest rate by 2% for the first year and 1% for the second year. So the mortgage payment has now dropped drastically because you have a 2% lower interest rate. Now, this is only a short term, but you managed to save yourself tens of thousands up front. The mortgage payment is now more affordable. And let's say in the future, you have the opportunity to refinance. Fantastic. But that gives you the option to save all that money up front and still have a low payment when you're buying a house.